Welcome to Bankers IQ YouTube channel where bankers sharpen their IQ. In this video, I explain DRI scheme, Differential Rate of Interest scheme. Introduction. The DRI scheme was established in 1972 by the Government of India and implemented via commercial banks under RBI directives. So it is a social credit initiative aimed at offering concessional loans to the most vulnerable segments of the society. So what is offered under differential rate of interest? Interest is fixed at a concessional 4% per annum. So lending includes both term loans and working capital, promoting self-employment and various livelihood activities. The third point is eligibility. Targeted at weaker sections, including SC/ST, minorities, physically handicapped, and others engaged in low-scale productive work. Coming to income limits, in rural areas, the person whose annual income is less than or equal to 18,000, and in urban, semi-urban areas, the persons whose annual income is less than or equal to 24,000, the people are eligible to avail loan under this DRI scheme. Coming to land holding cap, if the land is irrigated, it should be less than or equal to 1 acre. If the land is unirrigated, it should be less than or equal to 2.5 acres. But exemptions apply for SC/ST borrowers. Borrowers must not be availing other institutional market financing while under DRI support. So in only one bank they have to avail it. Okay, key features. Loan quantum for general productive purposes up to 15,000 rupees. For housing purpose up to 20,000 rupees. Additional 5,000 rupees may be extended to physically handicapped persons for aids, appliances. Repayment typically up to 5 years. Extended to 7 years for housing loans in hardship cases. Security is generally collateral free. However, financing banks may impose hypothecation of acquired asset as security. Reservation and targets. So banks must lend 1% of their total advances under this DRI scheme. At least 40% of DRI loans must benefit SC/ST borrowers. The fifth point is latest updates. As of 2025, August 20th. The Reserve Bank of India's Master Circular, June 16, 2025, reaffirmed focus on enhancing DRI access for SC/ST communities alongside strengthened monitoring and streamlined procedures for credit facilities for SC/ST groups. No recent changes in interest rate, it is 4% only. Eligibility also same, or loan limits were reported. DRI remains anchored at 15,000 rupees, 20,000 rupees caps and 4% per annum interest, as I explained in the previous points. For clarity purpose, I am quoting an example. Mr. Rao, a physically handicapped SC borrower from a rural area with annual family income of 17,000, takes a 15,000 rupees loan for a tailoring machine at 4% per annum, repayable over 5 years. Additionally, he gets 5,000 rupees for disability aids appliances. No collateral required. He can commence a tailoring business, avoid informal high interest borrowing. So practical points for bankers in the bank promotion examination point of view. DRI, differential rate of interest, is a priority sector social obligation scheme, not profit driven. Banks must allocate 1% of total advances for DRI with a minimum 40% reserved for SC/ST borrowers. Maximum loan is 50,000 rupees for general purpose. If it is housing loan, maximum loan amount is 20,000 rupees plus 5,000 extra for aids to handicapped. Interest rate fixed at 4% per annum, unchanged and stable. Features simple eligibility, minimal documentation and collateral free access. So backed by RBI monitoring frameworks and master circular mandates, especially post 2025 updates. Eighth point is one line summary. The DRI scheme Differential rate of interest scheme established in 1972 is a government-led priority sector lending initiative offering up to 15,000 rupees for general purpose and 20,000 rupees for housing purpose at 4% per annum, with a 1% bank advance quota and 40% reservation for SC/ST borrowers, continuing under strengthened RBI oversight as of 2025. And please subscribe Bankers IQ YouTube channel, where bankers sharpen their IQ.